Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello viewers, welcome to the Fast Profits Daily. Myself Brijesh Bhatia. Well, IT index has been on a downtrend post the Infosys results, and if you look at the last 8 trading sessions, IT index has corrected over 10% now, and it has been one of the most underperforming sector into the April series so far. Well, if you're following my video regularly, I have created a video on 8th of March indicating that the IT index is a good opportunity to go long, and though it went few percentage, but it has corrected back again, and my analysis has gone wrong on that. But now if I look at the technical structure, the things are changing, and if you have read the headline, it's a good buy to the IT index in 2022. Let's look at the charts, what are indicating. If I just look at the first chart over here, the daily chart, the structure here is the distribution pattern as per the Wyckoff theory. And if I look at the rally into the last year, August, October, we have seen a buying climax coming into the structure. We saw a new high coming into the IT index in 2022 start, where the fake out happened, and since then it corrected right from 39,000 back to 33,500 in quick time. The reversal, the leg of reversal in the start of March, which highlighted me that the tide is turning for the IT index, and I went recorded a long biased video onto the IT index, was the reversal when the new lows were formed, and the reversal was very fast, quick time. That attracted me that the bottom is in place, but again, as I said, my analysis went wrong at that point of time. Now since it has tested 35,000 back towards 33,000 levels now, it is testing the previous lows, which is a sign of weakness. And if you look at the SOW, the sign of weakness, once that level is taken out, which is somewhere 32,500, I believe the momentum could turn to the bearish side. Again, just keeping a cushion of 32,500 to 32,000 just to confirm the trend has changed. Once 32,000 is taken out, I think the LPSY, which is the last point of selling, will be confirmed once the SOW is broken down, and it means indicate that the strategy on the items will be on the sell on rise, and I believe 32,000 is taken out will be the goodbye 2022. Second chart, if you look at over here, the same with the moving averages, and if I just look at the blue line, which is 50 days average, and the red line, which is 200 days average, they are converging now, and it is on a verge of death cross. And again, a death cross as per the technical pattern, which means that it is turning to be the bearish on the long term charts. So again, if the distribution structure confirm with the death cross, it really means that the IT could be the good buy. But one chart which convinced me that the IT index is about to underperform is the ratio chart of IT index to Nifty. So look at the screen over here. If you look at this chart, right from 2019 end, October 2019, the ratio chart was trending with the rising trend line, and every time it tested rising trend line, the outperformance of IT index over Nifty continued. And for the first time, we have seen IT index to Nifty ratio chart has been broken down the rising trend line. Also, it is confirmed with the bearish pattern, which is head and shoulder, and head and shoulder forming right at the top is the most dangerous sign for bulls now. So with the distribution pattern, with the death cross on cards, and underperformance of IT index, the ratio chart giving a breakdown, indicates that it is a time to say goodbye to the IT index in 2022, and one should definitely focus on to the other sectors where the outperformance is continuing. For me, if you remember, I have done a video at the start of the April when the result season are starting. Look at these sectors, and FMCG is one of the sector where I think the money might flow from IT to FMCG space, and that's the one sector which is picking up. Look at the ITC, look at the HUL, which is coming up very strongly. Nestle is coming up very strongly. So I think money might flow from IT index to probably the energy basket or FMCG basket. And as if you remember that video, I have done a ratio chart on energy to Nifty where it has broken out, and the dip could be an accommodation. So Reliance Right from 2680, I have recommended that it might test around 25. We made a low of around 25.20 and coming back very, very strongly. So the two sector, energy and FMCG, could be a good opportunity if money flows out from the IT, and this money might flow into the FMCG and energy space. So keep a watch on IT. 32,000 is broken out. I would suggest, as an investor, you should say goodbye to the IT space, and portfolio should be trimmed into from the IT to other sector. Signing off, Brijesh Bhatia.